it is another Friday. Hello, Maverick Currency traders. This is Rob Reinbold. I'm joined by Ankit Sharma. This is the Currency Room. Let's go ahead and get started. In this session, we're going to talk about the news of the week. We're going to go through all of the commodities, all of the Forex, all the cryptos. We're going to score them all from a +3 to -3, and that tells us where to go hunt for our trades.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
The equity markets are still riding the high from that temporary tariff deal that was put in place between the US and China. I know I've talked to a lot of traders who say, Rob, I don't get it. That wasn't that big of a deal. Look, this is where I always said, your opinion doesn't matter. The market's opinion matters. I have disagreed with the market a lot over my career. Guess who's always won? The market. That's right. The market has won. So now I just say, forget my opinion, forget my biases. What can I do to get on the right side of the market, regardless of how I feel? We got the dollar moving higher and yields hold steady, and we got inflation data that was well below expectations. We'll take a look at that in just a second here, but the PPI was actually a scary number to me. We'll talk about that in a second. And we actually got a little bit of more upside on crypto, especially in Ethereum. Ethereum and Litecoin are both playing a little bit of catch up at the moment. We'll take a look and see if cryptos have any gas left in them. Last week, I want to cover just a few things. We had employment reports out of the UK. This was slightly better than expected out of the UK. The employment report out of Australia was much, much better than expected. We also had inflation data out of the US. This CPI number came in really nice. Remember, inflation is Goldilocks. Not too hot, not too cold. This is perfect. 0.2, 0.2, 2.3 year over year. Those are perfect numbers, and that is Goldilocks. That's just what the Fed wants to see. But then we got PPI on Thursday, and look at this. Remember, we don't want too hot, we don't want too cold. This is cold. This is cold. -0.5 PPI. That's showing deflation. Deflation happens when demand is not there anymore. It's either going to be oversupply, which we don't really have an issue with. Really, that demand is not there. That's a scary number. Retail sales came in so-so. They came in okay. Headline number came in +0.1. So look, the economic numbers are holding in okay. Everything is okay at the moment. And that's where we are. And remember, the market was priced in to be a disaster. And now we're finding out it's okay. That's why we're getting that bounce back. Let's take a look at how the week ended up. We got the S&P up 5%, world index up 4%. That's another monster run. Remember, this is on the back of one of the biggest rallies we've had since like 2004, and it put 5% more on. That's astounding. Crypto holding steady, gold backing off just like I thought it was going to, and oil is just hanging out between, the high 60s, low 70s. That's just where it's staying for the moment. In the world of equities here, this is just such a great pattern. Again, we had a high base. We talked about, hey, we're holding here, we're holding here. We got the breakout on Monday. And I talked about this candle on Monday, whereas when you gap up and then you close at a high, it typically means there's more buying after it. You can see we got more buying all week this week. We're still not running into any resistance areas. Maybe 6,000 is going to be just the even number resistance. Sometimes it works, sometimes it doesn't. But really, we've got smooth sailing here. So I'm still bullish in this market. Ankit, are you still bullish in equities here?
Absolutely. I'm in the same boat here. Like I said, this market's low volatility and market is creeping higher. And the fact that, we had that big gap over the weekend and market just continued to add on to the gains, it's just telling you that there's no profit taking whatsoever at this point. So I think market will continue going higher until we get to that, serious resistance level where we'll start to see price will start to, reverse or start to stagnate. But, right now, I think we still have a bit of a room to climb.
Agree. And here we have the move last week in Forex, and the move wasn't great. Remember, on a good week, we see multiple currencies move 1% or better. We just didn't really see that this week. So, really, the best trade would be dollar Swiss franc, euro dollar. I like the Aussie, and I'm still going to be talking about the Aussie here. The Kiwi was wildly disappointing this week. This was a week where the Kiwi should have done at least as good as the Aussie, and it didn't. It's telling you that it is weak. But there's not a lot going on in the world of currencies. And in the world of crypto, we had a flat week. And this is what I said last week. I said, look, we've had a big run. Typically, after these big runs, we consolidate. Let's let things cool down. Let's let them consolidate. Let's see if maybe next week is going to be the week where they go ahead and take a run. We already took a look at equities. We took a look at Forex. Let's take a look at some of the other markets here. Let's take a look at the bond market. And I got to say, the bond market got up to this 4.55%. And I think above this point is going to be the first thing that spooks equity markets. But you can see it turned around, it went down, and equity markets hardly flinched. Anka, what do you think it means when we see interest rates on the 10-year go above 4.6? Do you think the equities can keep rallying like they are?
Like traditionally, I would say that there have been times where market just totally ignore it because the sentiment is so strong. And then there are times where, it start to like worry. This is why I think the market has more room to run because, the 30-year bond yield hit 5%. And it did pull back a little bit after that. But again, going into it, we are not seeing that correlated move between the equity markets and the bond market. So, we see a CC time to time where things just disconnect and just continue going the same way. That's what we are seeing in the bond market and the equities. I'm not seeing a whole lot of worry of that rising bond yields that's affecting the equity markets here. So there's a disconnect, and we might continue to see that disconnect till market really start to worry about it.
No, Anka, you are exactly right. Let's go ahead and just take a look at the basket on crypto. Exactly what we thought. This is what you get. You get expansions, bases. Expansions, bases. We're basing, and we're actually now near the lower end of the base, which I don't mind taking positions at lower end of the bases. So we're going to take a look at some possible trades here in the world of crypto. Next week, we have a couple central banks. Sorry, we just have one central bank. We got the RBA. That's going to be on Tuesday. They are supposed to cut rates by 25 basis points. That is the expectation. We also have CPI in Canada. We'll have to see if their CPI comes out any different than the US. My guess is we're going to see lower than expected inflation across the world. CPI out of the UK on Wednesday. The UK has had higher inflation than all the other countries. So I think if you're going to see one that doesn't work out lower than expected, it's probably here in the UK. After that, we've got some retail sales on Friday. Not really all that important. So other than the RBA report, I'm really not seeing any big fireworks here from news events this week. I think it's going to be driven by money flows, not by news announcements. Let's go ahead and take a look at the currencies one by one, score them from +3 to -3. I'm going to take crypto here. And here we have Bitcoin. This is a really nice base. So these are called high and tight bases. High and tight. I mean, take a look at how compressed these are. And we saw the exact same thing over here. When they get really compressed, this is actually a sign that it's even stronger than usual. I like Bitcoin here. I think it looks good. The big question is, when is it going to break out? Nobody knows. We'll take a look on a chart when we get to actually looking at trades, and I'll talk about some possible points. But everything is saying that somewhere in the future, probably near future, Bitcoin is likely to break higher. One of the things we look for is when the 20-day moving average comes in contact with the base. That can be a little impetus that pushes it out. You can see we're still a little bit away from that 20-day moving average pushing up against this. So I think we do have some more consolidating to go here on Bitcoin. Bitcoin Cash is actually having more of a pullback. It's fine. Very narrow pullback. It looks good, but I like bases better than pullbacks every single time. Here's Ethereum is still trying to work higher. this thing is definitely playing some catch up. Ethereum lost about 65% of its value. Bitcoin only pulled back about 25%. This one pulled back 65%. It's got some catch up to go. Usually I don't like to play underperformers, but this is one of those times when it's a really good bull market and everything is cranking. After everyone is sick and tired of buying all the winners, sometimes they go ahead and start to look at buying some of the losers. I think this could play some catch up, so I do actually like Ethereum and Litecoin as well. But if you're looking for the technically best trade out there, it is going to be Bitcoin with that high and tight base. Ankit, take us through Forex, starting with the dollar.
Absolutely. And I must say that dollar, I talked about it last week. It seems like it's turning its corner. And, for the last 3 4 days, we've seen sort of a sideways move, but, the prior resistance is now the support. So I'm actually liking this setup here. I do think that in the next week or two, we'll probably see dollar sort of make a move higher. Again, the yields have kind of risen up, and I think we'll probably see it follow suit. So overall, as you can see, sideways price action, but I do like the trend score improving, and then the velocity is there as well. So going into next week, the dollar is going to be on the top of my list for a long one. Now, when we take a look at the short setup, and I really like the setup, this Japanese yen, it was on my list last week as a -2. And you can see that in the last few times, every time we rally, we roll over, and we are right below that 20 to 15 moving average. This is a classic bear rally pattern. So again, as far as the risk reward goes, I think this is a perfect one to go for a short setup. So as the dollar took a bit of a backseat last week and yen was on the driving seat, I think we can see the sort of role switch. So dollar yen will be again the one I'll be probably paying close attention to. So this is the one that goes in the top of the list for me as the short one. Now, talking about these things that are slowly drifting sideways, and that's the euro, Swiss franc, and the euro. So you can see that Swiss franc, not an exciting trade, but we have seen movements. But you can see that those movements will last you maybe a day or two, and there's just not a whole lot of continuity to it. Eventually, once it breaks that 50-day moving average, I think that's when we will see much bearish score. But until then, I think we could expect a bit of a sideways move here. So I think yen looks like a better short to me here compared to Swiss franc. Now, on the other hand, euro kind of looks like the same thing. Now, if you take a look at this setup, if you say, well, I'd rather take more on the bearish side. And again, maybe I think that's probably be the outlook here. But again, the way things are moving is a lot more slower. So until we'll see what happens next week. I'm kind of putting my watch list and putting some support levels to break, but I expect some sideways price action till we really get a better sort of a velocity on this euro here. Now, on the other hand, British pound is looking the best out of the bunch. You can see that has a +2 trend score, but then again, the price action is not aggressively moving. We are running into the overhead resistance, so this is where, despite of that good price action here on the trend score, I want to see a confirmed breakout before we can really get aggressively bullish here. So mildly bullish on the pound. Now, a lot of the other currencies, I would say, are kind of going sideways. And Canadian dollar is one of them. You can see that's not really going anywhere. We'll see what happened with the CPI next week. But again, this is everything sort of flatline here. So not a great sort of a trade to be jumping on the CAD here. Now, we have a couple of currencies that actually done the best, like the Aussie's done the best since bottoming it out. But at the same time, you can see that we are sort of disconnecting a little bit here in the markets from the broader markets. I think that's really where we are in currencies, where currencies are kind of doing its own thing, and where the equity markets are up like 5% this week. Don't see a whole lot of move in the currency. So I think this is where I think we'll probably pay close attention to relative to the weakness. Next week, RBA is expected to cut rates. Remember, they haven't really been on the rate cutting cycle. So this is the one I think we could see a bit of a pullback going into that RBA. So, cautiously bullish here, but I think with the RBA rate cut ahead, I think we want to pay close attention to the statement. So not really, too excited for it. And then here we are with the Kiwi. I talked about this, that resistance level has been tested like 5 or 6 times. So the more it retests that level, the stronger that level becomes. And this is where I think I do not like the Kiwi long here until it really breaks out to the upside. But if it does break below the support area that you see, I think we could see a bit more pullback in the Kiwi here. But you can see that overall, the trend is not there. You're getting movements on a day-to-day basis, but just not a continuity to it. So if you're looking for that continuity, you need to get that score that actually moving maybe into a +2 or +3. That's really where you get the best moves. Right now, the moves are a little bit more sideways. And as always, we want to take a look at those breakout points on all these currency baskets, and then that will be a good indication where is the next big move is going to happen.
Thanks, Honkit. I usually don't mind taking positions at the lower bases. Like this to me wouldn't stop me from saying, hey, I want to get into the Kiwi long. Here's the problem. This week, equities were up 5% and the Kiwi stunk. So the fact that I'm not seeing any correlation between what I should usually see is that bullishness, the Kiwi does better, and I actually saw bullishness, the Kiwi does worse. It's definitely turning me off to this trade. Again, like I said, I don't mind going after a half position, as something bottoms off the low of the base, but this is just not showing the relative strength. I would rather be in the Aussie at this point because it is showing some strength. We just were able to break out to a new high. We backed off. As Anka said, let's get through that RBA meeting on Tuesday, and if it can get a ride higher, I much prefer Aussie to the Kiwi at this point. When we take a look at the trend scores, there's not a lot going on. Cryptos look great, and we are going to be focusing on cryptos here, and the pound is probably the best looking currency on a daily chart. Euro and yen short, I actually like both of these short quite a bit. I'm waiting for Swiss franc to join them, but I do like that trade. Here's the problem. I really like Euro yen short, but I don't like anything on the long side. And that's kind of an issue when we look at pairs trading, is that the best trades we make is when one's ripping higher and one is ripping lower. That's what we're looking for, and we're not getting it at that moment. What has the velocity here? Euro. Euro is going to be the weakest here, so I'm going to focus on Euro when we look at trades. Dollar CAD have the strength here. I agree with you, Ankit. I think the dollar works its way higher, but I think it's going to be a slow working its way higher, which means cryptos. Cryptos are probably the best thing to look at this week, and that is exactly where I'm going to start looking for possible trades. Before I jump into any analysis here, I do want to talk about cryptos and when they work best. Cryptos work best when there is a real bullishness and risk-taking aspect to the market, where people don't want gold, they don't want the dollar. That's when it does the best. And so we're kind of getting a decent setup here where, again, right now equities are heating up. It's been very hot. We have gold coming down. Let's take a look at the chart of gold here. We have gold coming down from just a monster run. I mean, this run in gold was absolutely probably one of its greatest runs it's ever had in the history of this asset class. It's coming down. We're coming back, testing the 50 here. So I do like cryptos here, the backdrop. I just wish we also had a falling dollar. That would make it even better. But 2 out of 3, that's going to be just fine with me. Here we are with this high and tight base. How do you trade these kind of positions? Now, as a young trader, I waited till breakouts. I just sat there and waited till breakouts. And what happened was I got a little bit frustrated because I would get these breakout points right here. Breakout. Hey, I'm buying this breakout. What happens? Sinks right back into the level. I buy another breakout over here. What happens? It sinks right back into this level and I get stopped out for a loss. And then all of a sudden, 3 days later, it takes off and makes a huge run. You could have seen this over here as well. Someone could have taken this as a breakout. Someone could have taken this as a breakout. And then ultimately, maybe getting stopped out down here at this little low here. You have to think about, how do I get into this position without with having a very good stop that is well below this base. So you need to have a stop well below this base. I would be down here at probably where this moving average is. So we're talking about 99,000. So I could take a smaller position size, which would be fine, or what I like to do is take a look at this base area. All right, so 102, we've had a couple of little wicks below 102. So that's going to be my point where I'm going to nibble. I'm going to nibble at these points. If it gets down to 102, I'm going to take a fourth of a position. And then I'm going to have a stop down here at 99,000 very comfortably. It's going to be a very small position compared to what I usually take because it's a fourth of a position. And then it comes back down to 102 again. I take another little position, and then all of a sudden it breaks out of 106. I take another position, and it falls back into the base here. Do you see how I actually have a really good cost basis still? If I'm only chasing the breakouts, that's all I'm doing is chasing every time it breaks out, my cost basis is going to stink. It's absolutely going to stink. So what I want to do is I want to grab things down here. So when I grab the next fourth up here, I have a good cost basis that's somewhere right in here. My stop is very comfortable down here because if you get in everything up here, your stop is not comfortable down here. That is just really far away. So I do like to grab little positions at the lower end of bases, and then that allows me to chase the breakouts. And if they don't break out and run and they fall back in, I have a very good cost basis. Bitcoin is the best looking one at the moment. It also is the one with the least amount of upside. The reason I just said that is, number one, it's done the best, and number two, it is the least volatile crypto out there at the moment, unless you talk about some tether coins, which we're not talking about. Bitcoin is now the old man in the room. It's like the old GE stock, where it just doesn't move like it used to. Whereas, the new stuff like Amazon and Google and NVIDIA, they're the exciting ones. Bitcoin is now the old man on the block. Volatility is much less than everything else. Let's jump into Ethereum here. Ethereum is actually showing some more strength. As you can see here, this base, we poked our head out above it a little bit. Really, the same thing applies here. Anything down below 25,000, I actually want to be a buyer on. I want to be grabbing some little positions down here if it gets down there. Then I can chase the positions as they break out up here and have a good cost basis. I like this here, but I would like to be right around like 2,500, where I would like to be nibbling a bit. And that's going to allow you to have a very comfortable stop wherever you decide, maybe down here at 2,300. That's where your stop is. This is how you can trade these bases and build positions and not have really bad average prices because you're only chasing breakouts. You're buying them at the bottom of those bases as well. This is how I think you've got to trade crypto here if you're going to trade it. Ankit, what do you want to take a look at in Forex?
Hey, Rob, in Forex, like I said, I like dollar next week. So let's just start with dollar again. Again, start with the daily chart. I just like the entry here off the bull pullback. You can see that this a prior resistance, now support, got a bit of a reversal candle today. Looking for a bit of a recovery here. And again, I like these trades just because of that risk to reward, because based on the risk to reward, I can easily get a 2-to-1 on these trades. So again, 145 as a support, but the next target about 148, and we're sitting about 146. So again, we're getting about 3-to-1 risk to reward here. So I do like this one. Dollar CAD, same thing. A lot of these dollar pairs, like I said, the dollar CAD seems to be turning its corner here. So same thing in between the 20 to 50. But all I'm looking for is that base to break out of. Just like we were looking at cryptos, base setups. That's what we're looking to see, a breakout of that. If this can get above that 140 area, I think then that will become the new support. Outside of that, euro dollar, take a look at that one. Looks very similar. Daily chart, you can see, slowly kind of carving a bit of a lower here. So, those are the ones that I think can easily catch some traction if the dollar really strengthens here. So it doesn't matter what dollar pair you look at. I think they all look very similar. So, and again, like I said, the yen short, I like the best here. Maybe pound yen, Rob, if you want to take a look at it. Same thing. Pound is acting really well. The yen here, same thing. Look at that. We tested that level, pull back, looking to play off this pullback in the pound yen as well. So pound against the yen, I like it on the long side, but then mostly dollar yen, dollar CAD, and some of the other dollar crosses. I think they could be interesting going into next week. So I'm paying more attention to the relative strength of weakness and less on that market correlation, because we are seeing that correlation sort of disconnect over here. So that's my game plan going next week.
Thanks, Honkit. And the one currency I'm looking at in trading this week, I do like that Aussie long. I am not willing to take it long until we get through the RBA, but I like Euro short. I like that Euro short chart. I think it was just low basing here. Eventually, we should get a fall off. And we've got a nice little, again, this isn't moving fast, so I don't want anyone to think, oh, this is going to be a big trade. But you know what? It's a pretty good little rundown. Run down, have a little bear rally, run down, have a little bear rally. We had this bear rally here. I like this trade. I just wish we didn't have a Tuesday RBA session, because I would like to get in it, at least a half position up here, and then maybe able to add down to it a little bit lower. I like this one just for the relative strength and weakness alone. I think this is likely to be, in a month, we look at these charts and say either the yen or the euro was the weakest, and the Aussie, pound, or dollar were the strongest. So I'm just hunting relative strength here on this one. To wrap this up, there's really nothing strong in Forex. We've got things that are weak, but nothing strong that's in Forex. Cryptos, I think we have a little bit more consolidation to do. I don't see big breakout and runs this week, maybe next week, the week after. Look, it could happen this week, but I think it's worth starting to build some little teaser positions at lows of bases if and when you can. And then if it breaks out, it allows you to chase it a little bit with another little teaser position. Understand that it might take 3 weeks for this thing to really break out and run, but this is a way for you to stay in during that entire base. Other than that, I don't love the trading market here in crypto and in Forex. It's just, I've seen better markets. It's not untradeable. If it was untradeable, I'd tell you, hey, take a week off, go on vacation, go do something, go do some yard work. I'm not saying that. I'm just saying it's not great. In that environment, trade less, not more. Be a little bit more selective on where you want to place your capital, and understand it might take a little bit longer for you to get the moves you want in this kind of market, which is fine. You can still trade it. Just understand what market you are in. Thanks for joining me. Everyone have a great weekend. Goodbye, everyone.